Thanks for waiting. Thank you very much for taking the time to join us today. Now we will commence the press conference for NTT Data financial results for the second quarter of the fiscal year ending March 31st, 2023. Let me introduce today's speakers. Representative Director, President and CEO, Yo Honma. Director, Executive Vice President and the Head of the Corporate Headquarters, Yutaka Sasaki. Senior Vice President, Corporate Headquarters, Head of Finance, Kazuo Kakeya. The moderator is myself, Ito, of the Public Communication Department. Today's presentation materials are the Tanshin earnings summary and company presentation materials, two of them. These materials are available for download on our official website under the IR information. Now, Mr. Honma is going to talk about the financial result for the second quarter of the fiscal year ending March 2023. Over to you, Mr. Honma.
Good afternoon, everyone. This is Honma from NTT Data. Well, thank you very much for joining this earnings results briefing session despite your busy schedule. Now, I would like to present you the results for the second quarter of fiscal year ending March 2023. Please turn to page 1. Here is today's agenda. I will explain the second results, then key initiatives in the first half. Please move to page 3. This highlights the second results. Results are based on the premise that in October, we combined overseas business of NTT Limited and as NTT Data Inc. We have commenced business operations as one since then. But NTT Limited results are to be consolidated from the third quarter. Therefore, its second results are not reflected here. As for the NTT Limited first half results, that is scheduled to be covered in tomorrow's NTT earnings announcement. Now, let me turn to our performance. New orders received. It was due to drawbacks from the previous year's large domestic deals. However, project wins abroad and FX impact increased the orders. As for net sales, it enjoyed increased business scale across all segments as well as FX impact, and it recorded an increase. As for operating income, it was helped by revenue growth. However, because of unprofitable projects and incremental company-wide strategic investments, it was on par with last fiscal year. In the second half, we plan to spend more for future growth with company-wide strategic investments. However, as we continuously see a growing demand of digital transformation with our clients, we aim to grow profit by driving sales to achieve the full year guidance. I will take you through with details by each measure later, but please allow me to explain segment classification that we have revised since the second quarter. Please move to page 4. As of July 1st, 2022, organizational changes took place, leading to 2 major changes in disclosure segments. First, Technology Consulting and Solution segment was newly established, and the enterprise segment scope has been revised. Due to the organizational changes, what enterprise and solution segment used to cover, such as digital solutions, data centers, network business, and so forth, have been transferred to the technology, consulting, and solution. Under the new disclosure segment classification, those figures are included in the others segment. The second change has been made owing to the overseas business merger. The former North America segment and EMEA-L segment, as well as China and APAC, which used to belong to the other segment, will be aggregated and reported under the overseas segment. The segment classification revision has changed the mix of the forecast, the details of which are described in appendices of this deck. On the domestic front, the financial and the enterprise figures are partially transferred to the other segments. However, it will not impact the overall guidance. Now, let me move on to year-on-year changes by each measure by segment on page 5. First, new orders received. The public and social infrastructure segment was impacted by drawbacks from last year's large contracts with central government and ministries, leading to a decline. Likewise, the financial segment, due to large project wins from financial institutions during the previous fiscal year, it recorded a reduction. Enterprise segment won projects for the manufacturing industry and grew orders. Overseas segment enjoyed growth thanks to project wins in Europe and currency translation gain. Please move to page 6. Next, net sales. The public and social infrastructure segment increased a scale of services for the central government and ministries, resulting in an increase. In the financial segment, the scale of services for large financial institutions expanded, and it reported net sales growth. As per the enterprise segment, the project size increased for the manufacturing industry and the retail and services sector, and the size of payment services became greater, thus it reported an increase. Overseas enjoyed FX impact and greater size of services in Europe, recording incremental sales. Please move to page 7. Looking at operating income, the public and social infrastructure recorded a decline due to unprofitable projects. The financial, enterprise, and overseas segments increased profit, mainly helped by sales growth. Also, the others dropped the figures, which is not disclosed as a segment, mainly because of more spent on the company-wide strategic investments, which had been factored in our initial guidance. Details of what I have just covered can be found in the following slides. So this wraps up the section of the results for the second quarter of the fiscal year ending March 2023. Next, let me talk about the currency impact. Please turn to page 13. The second quarter continued to see the rapid yen depreciation since the end of last fiscal year, and compared to the rate expected in full-year guidance, the actual rate has been weaker. In the second quarter, compared to our rate in the forecast, it is approximately 14 yen and 6 yen weaker against US dollars and euro respectively. Without entity limited or against our standalone guidance, as shown here, the FX sensitivity is expected to work positively on our performance. Let me turn to our key initiatives in the first half of the fiscal year. Page 15, please. First, the status of the combined overseas business. On the 1st of October, we combined the business, and this is the outline. Through the joint investment with NTT, the overseas operating company called NTT Data Inc. was established by combining our non-Japan business and NTT Limited's overseas business. This merger has increased the net sales of the company to reach approximately 3,600 billion yen, with around 190,000 employees. The overseas business has grown to represent about 60%. For the overseas business, with around 140,000 professionals, our teams will serve clients across over 80 countries and help grow clients' businesses and address societal challenges. The next topic is enhancement of the global business management. Let me share the timeline and the progress status. Please turn to page 16. This shows the overall schedule to transition to the global business management structure. At step 1, currently, we have just combined our overseas business with NTT Limited, and from July 2023 and onwards, as a step 2, we plan to convert NTT Data into a holding company and transfer its domestic business to the Japan operating company to further strengthen the global business management structure. Next, let me share some specific initiatives we worked on during the first half. Please turn to page 17. This slide shows innovation centers launched in August 2022. In the past, researchers, consultants, engineers, and the other experts were dispersed across the globe, but now they have been consolidated into these centers to collect information on cutting-edge technology and test them and promote co-creation with clients, while moving fast to identify and gather information on the leading technologies there to leverage them for our future technology strategy. Going forward, by the end of fiscal year 25, we plan to enhance the organization by increasing the experts to 300, aiming to form 50 or more mid to long-term R&D partnerships with clients. Please turn to page 18. This shows an example of the TCFD disclosure-related consulting service. This service will provide support in establishing an organization, calculating CO2 emissions, setting reduction targets, and disclosing information to respond to TCFD reporting as a one-stop consulting service so that clients can sustain and further enhance initiatives to reduce greenhouse gas emissions. By the end of fiscal year 23, we aim to provide this service for 50 businesses. Let's move to page 19. This shows our solution developed with SAP to improve supply chain insurance management. Due to rising geopolitical risk, trade growth, and volatility of material availability, global value chains are becoming increasingly complex, growing the demand of quickly adapting to incidents while transporting. This solution enables monitoring various real-time data on transportation operations so that we can meet clients' needs. With this solution, we are currently collaborating on a pilot with partners such as the Spanish Logistics Group and German insurance company, and plan to turn this concept into real-life projects and extend the solution to international insurance and logistics companies in future. The rest of the slides describe topics by segment and other numerical information, which I would like to skip for this session. This concludes my presentation. Thank you for listening.
Thank you, President Honma.